Right now, as I'm recording this, Caspa sits at a crossroads that could either validate the believers or, crush the dreams of an entire community. But the math doesn't lie, and neither do whale wallets that just moved 2 million KS in complete silence. I'm about to show you why the next 72 hours could reshape the entire altcoin landscape, and why smart money is positioning for something most retail investors haven't even noticed yet. Kaspa isn't just another altcoin riding Bitcoin's coattails. This is a proof-of-work beast with BlockDAG technology that makes Bitcoin look like dial-up internet. But right now, the technical superiority means nothing compared to what's brewing in the derivatives market. At exactly 0.9 cents, there's a liquidation wall that would make even Celsius blush. $35 million worth of short positions are sitting there like dominoes, waiting for one catalyst to start the cascade. Think about that for a second. In a market where KS trades roughly $15 to $20 million in daily volume on good days, a single liquidation event could represent nearly double the average trading activity. This isn't just market movement. This is market manipulation potential on steroids. But while retail traders are busy arguing on Twitter about whether CAS will moon or crash, Wallet 7 just made a move that should have every serious investor paying attention. 2 million KS transferred from Kraken, not to sell, to accumulate. This wallet now holds 256 million KS tokens. For perspective, that's roughly $20.8 million at current prices. This isn't some degenerate gambler throwing pocket change at a meme coin. This is institutional level positioning that suggests someone knows something the rest of us are still figuring out. The timing is suspicious too. Major accumulation right before a potential short squeeze? Either this is the luckiest coincidence in crypto history, or smart money is positioning for something big. Scape Squad dropped a bombshell on X that caught my attention. The KS dip was strategic. They are not messing around. This isn't hopium from bag holders. This is pattern recognition from traders who've been watching Kaspa's price action like hawks. The recent dip to 7.28 cents wasn't capitulation, it was coordination. Think about the psychology here. Retail sees red candles and panics. Institutional money sees red candles and backs up the truck. While everyone else is crying about their portfolios, whales are accumulating at discount prices. But why the strategic timing? Because next weekend represents a confluence of technical and fundamental factors that could create the perfect storm for a major price movement. Cryptocurrency markets are notorious for weekend volatility. So, lower volume, fewer institutional traders active, and retail FOMO can create, these explosive moves in either direction. If you're planning a major accumulation phase before a potential rally, you do it during the week when volume is higher and price impact is minimized. The mathematical beauty of this strategy is honestly elegant in its simplicity. You drive price down through coordinated selling, accumulate at support levels, and then just let natural market forces and technical patterns do the heavy lifting for the rally phase. Now, for the technical analysis that's about to blow your mind, Caspa is forming a bearish butterfly harmonic pattern on the daily chart, and despite the scary name, this setup often triggers massive bullish continuations during the CD leg. Point X started at $0.1315. The pattern traced down to point A, rallied to B, then retraced to C near 7.28 cents. We're currently in the early stages of the CD leg at around 8.12 cents, but this is where harmonic patterns get interesting. The potential reversal zone sits between 15.08 cents and 17.55 cents, representing 1.272 to 1.618 Fibonacci extensions. These aren't random numbers pulled from thin air. These are mathematically derived price targets based on decades of market behavior analysis. But there's one crucial resistance level we need to break first. At 8.6 cents, the 200-day moving average stands like a bouncer at an exclusive club. This isn't just any resistance level. This is the line between institutional confidence and retail speculation. Breaking above and closing decisively over 8.6 cents would flip this resistance into support, creating a technical foundation for the next leg higher. More importantly, it would trigger algorithmic buying from trend-following systems and momentum strategies. The liquidation cascade I mentioned earlier? It starts getting interesting right around this level. As price approaches 0.9 cents, those short positions start feeling uncomfortable. Risk management algorithms begin covering positions, which creates buying pressure, which drives price higher, which forces more shorts to cover. It's a feedback loop that can turn a modest technical breakout into a full-blown squeeze event. So, Ethereum holding strong at $4,300 after retreating from $4,953, is creating a bullish backdrop for the entire altcoin ecosystem. When ETH stabilizes after such a major move, it typically signals that smart money is rotating into smaller cap alternatives. Caspa benefits from this rotation in two ways. First, it's still flying under the radar of most institutional investors, meaning there's room for significant price appreciation without immediately triggering profit-taking. Second, its proof-of-work credentials appeal to Bitcoin maximalists who are looking for alternatives with similar security models. The cryptocurrency market is showing notable strength across multiple sectors. DeFi tokens are pumping, Layer 1 alternatives are gaining momentum, and even some of the more speculative plays are finding their footing. In this environment, a technically superior project like Caspa with strong accumulation patterns and favorable derivatives positioning becomes incredibly attractive to momentum traders and institutional funds looking for asymmetric risk-reward opportunities. The audacious claim that Caspa will reach the top 3 cryptocurrencies by market cap isn't as crazy as it sounds when you break down the numbers. Currently sitting at roughly $2 billion market cap, KS would need approximately 10 to 15 times appreciation to crack the top 3, depending on how other projects perform. Is that realistic? Well, consider that Solana went from $3 billion to $100 billion market cap in less than 2 years. Cardano hit $90 billion at its peak. Even Dogecoin, it briefly touched $90 billion during the 2021 bull run. The difference is that Caspa has actual technological innovation backing its price appreciation potential. BlockDAG architecture, 1-second block times, and unlimited scalability aren't just marketing gimmicks. They're real solutions to real problems that Bitcoin and Ethereum still struggle with. The beauty of this setup is that most retail traders are completely oblivious to the confluence of factors aligning. They see a coin that's down 80% from its all-time high and, well, just assume it's dead money. They don't understand harmonic patterns, whale accumulation signals, or derivatives market dynamics. While they're busy chasing the latest meme coin or, following influencer calls on Twitter, institutional money is quietly positioning for what could be one of the most significant altcoin moves of this market cycle. The psychological barrier is real too. After watching KS bleed for months, many holders have developed learned helplessness. They're so conditioned to expect disappointment that they can't recognize genuine accumulation patterns when they appear. This creates an opportunity for contrarian investors who can separate emotion from analysis and position themselves ahead of the crowd. Of course, no trade is guaranteed, and cryptocurrency markets can humble even the most experienced participants.